Welcome to MarketSnap's daily market rundown. Tesla just had its worst day in a year, wiping out billions and dragging the entire market down with it. But that wasn't the only story. Oil is surging past $100, bond yields are spiking, and the Fed is suddenly back on the table. Let's unpack what happened today and what it means for your portfolio. It was a rough session across the board. The Dow dropped nearly 1%, the S&P 500 fell 1.2%, and the Nasdaq took the hardest hit, losing over 2%. The VIX, our fear gauge, spiked 12% to just under 19, signaling that the market's calm surface is officially cracking. The main culprit? Tesla, which cratered over 14% after a disappointing earnings report. Elon Musk's AI ambitions are burning through cash, and the market is starting to question the return on that massive spending. Alphabet also slid nearly 7% despite a strong earnings beat, because their CapEx guidance spooked investors. Amazon, Oracle, and Shopify all followed lower. But it wasn't all red. Defense stocks had a massive day. Lockheed Martin surged over 10%, and RTX gained more than 7% after the House authorized a $1.15 trillion defense budget. Thermo Fisher and Danaher also jumped on strong earnings, showing that quality healthcare names are finding buyers even in this sell-off. The big story beneath the surface is oil. Brent crude hit $100 a barrel again after Houthi militants attacked Saudi tankers in the Red Sea. This is escalating the conflict in the Middle East and threatening global energy supplies. The knock-on effect is already hitting mortgage rates, which just hit their highest level in nearly a year, and raising the odds of a Fed rate hike in September. We're smack in the middle of earnings season, and the bar is getting higher. Alphabet and Tesla set the tone this week, but next week is the real heavyweight bout. The Fed decision lands alongside a blitz of big tech reports. The market is nervous that the AI spending spree might not pay off as quickly as hoped. You can find exclusive earnings transcript summaries on MarketSnap. One more thing to watch. Corporate insiders are selling at elevated levels while retail investors keep piling in. That's a classic warning sign. Meanwhile, the credit market is flashing yellow, with bond yields rising and spreads widening, especially for CapEx-heavy tech names like Oracle and Nvidia. Looking at sectors, energy and basic materials led the week, both up over 3%. No surprise there given the oil spike. Utilities also held up well. On the flip side, technology and healthcare were the worst performers, each down over 1% on the week. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in. If you found this helpful, hit that like button and subscribe. We'll be back tomorrow with more analysis, including our exclusive SWOT breakdowns on the names that matter most. Stay sharp out there.